The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate. I'm Tim Calloway. We have a very special guest for you today, Andrew Holmes with Build Your Empire. He is going to talk about his upcoming event on November 18th through the 20th, both on location and virtually. Andrew, how are you?
I'm doing great, man. Thank you for having me.
Yeah, no worries. Excited to hear about your upcoming event. But before we do that, hey, why don't you kind of give us a breakdown on how you got started in real estate? And I did a little due diligence on you, so I read a little bit about your background. But I think for the listeners, they'd love to hear that as well. It's a good story.
Sure. So basically, it started as a real estate agent at the age of 19 till about 32. Always wanted to invest, but I got in the kind of running on the treadmill as a real estate agent. Right. And in 2008, when the market crashed, when everybody was running for the hills, I started doing flips. So 2008, 9, 10, I did flips, and then realized that I had given up one treadmill, which was the commission treadmill, for a flipping treadmill. And, and so in 2011, January 2011, started buying rental properties. And over the years, have accumulated a large portfolio of rentals. So at this point, I'm somewhere around like net cash flow, about 115,000 net a month in rental cash flow. And so now the next goal is to get from 110 net cash flow to about 250 a month in net cash flow. So that's kind of the next race.
Yeah, nice. So, there's a lot of what do you say? We call it baptism by fire.
Yeah.
When you go from being a commission realtor to starting to either flip homes or sometimes they even get in development. Did you find a lot of pitfalls right away? And I'm sure that's part of your experience you share with people when you do your events. A lot of pitfalls you ran into when you first started out, or?
Fortunately, I can't really say I made big mistakes because I was I was trained by a real estate sales coach, I should say, had nothing to do with flipping or anything, to be very numbers oriented. So when I got into doing flips in 2008, especially, I was pretty focused. I only did the medium price range in the suburbs, everything below 350. In no house more than 1,400 square feet, anywhere from 850, 900 square feet to 1,350. And I had that discipline. So even when a lot of people went belly up during 2008, 9, 10, my business grew. So that was very fortunate. But the amount of work and stress it took to build a flip business, that was work than just being a real estate agent. I could make more money. I was doing pretty well as a real estate agent. And what I realized was flipping was another job I had taken on like a real estate agent, and I had zero net worth to show for it. Yeah. So it was just and that was my biggest problem, was that I had gone from making no money to making good, decent money. And then the fear was, oh my God, how do I keep up with this rat race every year, year in, year out? And I'm 32 and I can't be any more motivated because I'm motivated out. So that was kind of the transition, that I wanted net worth and I wanted cash flow. So
perfect. So tell me about your upcoming event, November 18th. Well, what will we be learning? What's the premise of the event? Walk me through that.
So, the premise of whatever I do is that there's only one thing that counts, and that is cash flow for all of us, right? If you're doing flips, it's great. Just understand you're running on a treadmill. All of us have had to have a job or something else that creates money so we can meet day-to-day expenses, right? But we all really need to build towards is cash flow income. So basically, it's either you're doing a BRRRR strategy. I call it a 2-5-7 strategy, which is 2 years, 5 properties, get them all paid off in 7, and build scale up from there, or Airbnbs. So the event, all of it is all about how do I find the right properties day 1. Day 2, we always, people who are there in person, we take them out on a bunch of buses to a bunch of properties. And these are not properties for sale. We're not selling anything to them. These are Airbnbs, and these are everyday bread and butter properties that anybody can accumulate, right? So they got to touch, feel, see exactly what we do and how do we do it in such large volume. And that day, it's all about building if you want to build a flipping business, what does a business look like? Rather than, oh my God, I do big flips. I don't believe in big flips. I want to do something very targeted, 900 square feet to about 1,400 square feet, and that's it. Because that's where you get the highest margin. And then day 3 is, how do you stack and build a large portfolio, and how do you do it very profitably, right? So today, the focus has shifted a little bit. It's gone just from purely long-term holds to local Airbnbs, not Airbnb in exotic markets, but local in your market Airbnbs, because they're 4 to 6 times as profitable, and they're inexpensive to buy in your local markets. So that's kind of the focus. And what has happened as a result of that, because we drink the Kool-Aid for cash flow. I mean, I believe in it, and everybody around us. We have a group of about 1,200 people here that are out of Chicago, and they own close to about 18,000 plus rental properties.
Wow.
Right? So that's something that we really, really, really hone in on, that we don't count your success as the flips you do. We count your success as the rentals that you accumulate, if that makes any sense.
Sure, because that's ultimately what creates the cash flow.
Right.
And that's really why we're all involved, right?
Correct.
So yeah, good stuff, man. Very good stuff. Now let me ask you, your training, if I were to join your training and I'm in Southeast Florida, is it advantageous to me? Is it for everybody across the United States and the world, or is it Chicagoland focused?
So the basics work for everybody. Like, we're in Southwest Florida also. So we're doing duplexes, triplexes, new construction for Airbnbs, and the model we use in Chicago, it works everywhere. As the model is basically based on what we call LPN, which is your lifestyle property number. How many properties do you need to have a certain lifestyle? And then it goes area selection, property selection, because the basics that work in Chicago, the same basics we use for Florida, same basics for Georgia, Tennessee, the basics are the basics. The question is, can you stick to a strategy, pick one, then stick to it, and now can you drive it at a very high pace?
Right. Fantastic. So let me ask you this. It seems like you got a lot going on. You're doing your own purchasing and running your own business, and then of course you're doing the events. So if I were to stroll into town and go back to my old house over in Oak Park, and I said, "Hey, Andrew, let's go have some lunch," and we were just sitting down talking. As we're talking, what issues in your business right now? Are there any issues that I could help with, or if I had a magic wand, I could make better for everybody? What might that be?
I think the biggest, as we speak about it today, for all of us, I think the biggest challenge and that provides the biggest opportunity today is the changing market, and which is your interest rates, right? I mean, that's one of the biggest challenges, yet it's going to end up being one of the biggest gifts, because now you can again renegotiate numbers with sellers like no tomorrow. Right. So I think for anybody that is serious, and if you're buying properties at a significant clip, one of the big challenges again is interest rates. So that's really the big thing. But now we're negotiating 30, 40, 50, 60,000 down with sellers. So
wow. Yeah, that's nice. Now I assume in your program you actually teach negotiation skills.
Absolutely. Yeah.
Yeah. Big
100%.
Yeah,
big part of it. And big part of it is also the biggest reason why I've been able to grow and why people is because of private money, right? That was kind of the secret sauce, that on the front end, who do you go to to get money when you don't know anybody. It's easy when you're experienced because
Right.
everybody wants to give you the funds because you're confident. Number one, you have an actual business. But when you're brand new, nobody knows you. You may have great ideas, but how do you actually get private money? And so one of the biggest reasons why the numbers are as astronomical within the group as they are, because we're able to get private money within the group to other people. So one real estate investor is giving the money to other real estate investors from their 401ks, from their self-directed IRAs, from all of that stuff. And that's been the secret sauce, because that's what you need initially until, for some people, they can go to a hedge fund, they can go to a hard money lender, you know.
Right.
So, yeah.
And well, and also because they kind of build some assets up, they've got
100%.
a little more stroke, right? A little more power to go in there. Question I've always, when I talk to individuals that have so much success like you do in actually purchasing homes and either flipping them or renting them out or Airbnb, whatever they might do, how many homes is too much? And when I mean that, like, you might think, well, none, you move forever, but obviously there's a cliff, there's a point where, what do you recommend someone who walks into your program, they sit down in the seat, they interact, they get involved, they move forward, and they say, okay, I just bought my first house. They're clapping, they're excited, right? They're getting really excited. Then what always happens, what I always found happens, is they want to go out and do 2, 3, 4, 5, 6, 7, 8. Now they're like, oh, I just need to multiply times 100. You said at the top of the show, one of the things you want to do is, get more deals this coming year. That's a big push for you. When you're just starting out, what do you recommend on number of deals, say, in the first year or two?
So it's not the quantity, quite frankly, it's the quality, right? It has nothing, like, I'll give you an example. You can do 10 good single family rentals, right? 10. And every single month, net after expenses and zero in out of pocket, 5,000 a month net, right? And we can repeat this 100 times over. A lot of times what people will do is they'll trade quality of properties, meaning they'll go to a D area, C- area, and say, oh my God, I got 10 houses. Well, I mean, having a small pile of crap and a bigger pile of crap is just a bigger pile of crap. Right. I mean, to me, there are three things that have to happen for what I would call a home run deal, right? So we stack it as home run deal, a great deal, a good deal, and then I don't want it, right? So by a home run deal, what we mean is, number one, your area has to be good. A, B area, B- area is okay, right? Number two, you have to have equity 25 to 30% after rehab, minimum. And this is what we're talking about for a rental property to keep, right? Then on top of that, you need a cash flow. So whatever your total amount collected is, we like to see 450 to 500 net cash flow after expenses, right? And then we want a DCR of 1.33. So if all those three things hit, right, and you don't have cash out of pocket to be able to do that transaction, meaning you bought it, rehabbed it, refinanced it, got it out, and it's a B or A or B area, that becomes a great quality property. So it's not how many is good. Up to 15 to 20 properties, the way we do it, because we only do 3 to 4 year leases, 2 to 3 year leases. We don't do any yearly leases at all. So then the turnovers are very low. Our average turnover is 4.4 years, 4.5 years is our average turnover, right? So, and we don't get that many tenant calls because, again, it's quality of property and it's good tenant selection, right? So anybody can buy properties in crappy areas. That's not a skill set, right? The skill set is, can you buy great locations, great equity, good cash flow, and then over time have the discipline not to take that money and go play with it, is to do heavy pay downs or buy more good quality properties, right? I mean, and that requires a little bit of a discipline. To me, it's a 5-year run. Honestly, for somebody really to have some net worth, that a couple of years you can get to 5 or 10, 15,000 net cash flow a month after expenses. But if you truly want independence, right, in real estate, it's going to take you 5 years. And I mean, I've believed this, that if you take care of real estate for the first 5 years, real estate will take care of you for the rest of your life. But the foundation, which is the first 5 years, is really critical, right? There's no such thing as get rich quick. I mean, if you
Right.
know something ethical, moral, and legal where you can get rich quick, please let me know. Right? I've been looking since the
My
beginning
whole
of time.
life. Right.
Yeah. I mean, can you quicken the process? Yes. But what you can't do is you can't shortcut it, if that makes any sense.
Sure. Oh no, for sure. Everybody wants a shortcut. Everybody, right? Do you recommend getting a property manager right away, or do you recommend do you self-manage the properties?
I mean, I personally believe until 15 or 20 properties, you need to learn a little bit because once you learn the process, it's really not that difficult, right? Now, once you start getting to 30 and 40, the property management is not as tough. What is tough becomes is pieces of it, opening the bills, making sure all mortgages are paid, all the other BS that goes with, secretarial work, you can call it, right? It's like, if you're getting too many calls from a tenant because your toilets are stuck, and this is the typical stuff people think, you made a mistake, right? In terms of property selection, in terms of setting it up, in terms of pool of tenants, right? So, but the biggest thing that becomes a big hassle is just being able to pay that many bills, to be able to, open that much mail, all those types of things, especially if you're doing something else, right? If you're not doing anything else, for God's sake, right? Yeah, it's 2-3 hours of work a day, right? If that. So even with 30, 40, 50 properties, it's not that big a deal.
Yeah, makes sense for sure. So if someone wants to, come to your presentation, your event on the 18th, how would they find it? How would they find out about the event, Andrew?
They go to andrewholmesevents.com and they can register. So it's simple, andrewholmesevents.com.
Fantastic.
Absolutely.
Well, we're kind of winding down to the bottom of the show. What I always like to do is give my guests an opportunity in the last 1, 2, 3 minutes, kind of talk about whatever they feel compelled. Maybe we missed something in the show that they want to talk about. The floor is yours.
Right. So, I mean, all I would say to people, if you're listening, is, guys, today there's no lack of information, right? You have more information. Podcasts like this, there's so much information. The biggest issue is you have to pick one, and then you have to stick to it, right? And you have to stick to it, meaning none of us can know everything there is to know. There's too much. And the more you learn, the more you realize how little we all really know, right? And so I think what you have to do is decide one thing. And for a lot of people, it's like, oh my God, I'm going to go do multi. God bless, go do multi, right? But then become the best at it. Don't just follow people because, oh my God, I bought a 500-unit building. That's not what it is. What you have to me, my challenge to you is this, that if you're going to invest in real estate, investing means two things. One is over time, you need to have net worth. And number two, every single month, you have to have a growing cash flow. Just to do transactions for the sake of transactions, meaning flips or buying multis over 2-3 years, moving them out, it's great to get those infusions of cash, but that is not building true wealth. The challenge for you should be is, hey, can I build true wealth? And the last thing I'll just say is this, that some people count their wealth in the size of the house they live in or in the type of car they drive, right? I tend to count my wealth in the number of properties I own that other people live in, because that to me is true wealth. So having said that, thank you so much for giving me the opportunity.
Andrew, thanks so much for being on the program today. If you're out there, either in Chicagoland or even if you want to do a virtual, definitely go to andrewholmesevents.com, check it out, sign up. I think it'd be well worth the time spent. Andrew, I'll catch up with you the next 3, 6, 9 months and see how things are going.
Definitely will, bud. Thank you so much. Appreciate it.
Have a great day.
Bye-bye.